Wondering what tax deductible actually means? Well, watch on. As business accountants, my team and I spend all day long helping business owners on their journey. And one key misunderstanding is often with the term tax deductible. So people throw it around a lot because it is a good and it is a benefit to your business generally and to you, but it's not always as amazing as it seems. And I thought it'd be a really good topic just to cover in this short video. So if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more just like this one. So then, tax deductible, what's the deal? Well, I think what people presume, and I'm going to show you on screen a little bit of maths here, don't switch off, it's a tiny bit. People presume that your business is doing well and you've got a tax bill of £10,000. So the instant common misunderstanding is if I go spend £10,000 elsewhere, I'm going to wipe out my tax bill because it's tax deductible. Now, when we're talking about tax deductible, what we mean is if the tax office, HM Revenue and Customs, HMRC as they're known to us, if they say something's tax deductible, that means they're going to allow you to knock it off of your profits in the business and you're going to get tax relief on it. Now, tax relief, tax deductible, very much the same sort of thing. And I'm going to show you how that works. So let's say you pay some staff through your business. That's a very normal, very tax deductible cost. So you'll get tax relief on that cost. So yeah, instant thought is someone thinks, okay, so I've got a tax bill of £10,000. If I go spend £10,000 more on my staff or give them a bonus or something like that, great, I don't have to pay that to the tax people. I'd rather they have it. But it doesn't quite work like that. So the thing to get your head round is that it doesn't reduce the tax bill directly. It reduces the profits in the business. I'm going to show you that in a sec. So rather than in this example having £52,000 of profit, you've now got 10 grand less. And then your tax bill is then calculated on it. So you can see that in one example, people think, okay, well, I'm going to wipe it out. But in reality, what happens is you actually save £1,900. And that's because your tax rate is 19%. So corporation tax currently, for this is a limited company example in this particular bit of maths, is 19%. So if you spent 10 grand, if you actually just put that in the calculator and put times 19%, you'll see it's £1,900. So, and if you look at the two examples, we were paying £10,000 of tax. When we spent £10,000 on some tax deductible business expenditure, we've now got a tax bill of £8,100, and therefore we're saving £1,900, which is 19% of the expenditure. So if you think about it, what it really makes happen is your expenditure is, in this example, 19% cheaper. So if someone says to you, oh yeah, it's tax deductible, and you want to know what that means, just kind of put the cost in a calculator and just times it by 19% in this case. You know, if you were a higher rate taxpayer, you might be timesing that by 40%. You know, it just depends on your tax rate at the time. But for limited companies, that's how you do it. So if you think about it, anything that's tax deductible is basically cheaper because you're going to get like a tax credit against it. That's often, I think, the easier way to think about it. And this applies to lots of things. People do this with, they think, okay, I'm going to claim some expenses back from the government because my employer didn't pay me my mileage allowance. And they get this picture in their head of, okay, my tax bill is normally 4 grand and I've got 4 grand of mileage and therefore I'm not going to pay any tax. It isn't that. You're, again, in that example, you'd be reducing your earnings before they were taxed, and it reduces it by some tax, almost a tax credit. So hopefully I've explained that well enough. But just think, tax deductible is a good thing. It does make things cheaper, but it isn't a complete wipeout of your tax bill. It is really you're saving a percentage of that cost as it reduces your profits, which therefore reduces your tax bill. Hopefully I've explained that well. And if you do know anybody that needs to know this information, please do share it with them. And I'll see you in the next one.